The 70% failure rate. 70% of enterprise mainframe migration projects launched this year are officially on track to fail. Gartner released these figures this morning, confirming that the rush to swap legacy COBOL for AI-generated Java is creating a multi-billion-dollar graveyard of abandoned pilots. While cloud vendors sell the dream of a frictionless exit, the reality is that generative models are hallucinating logic across 40 years of undocumented dependencies. For the C-suite, this is not just a budget overage. It is a direct threat to the operational continuity of global banking and logistics systems. The financial industry is discovering that while AI can read the code, it cannot replicate the unique throughput of a Z17 processor. This gap between marketing promises and technical execution is leading to massive write-offs that are currently being buried in broader IT spend categories. The scale of this waste is about to hit the bottom line for every major systems integrator in the sector. The consulting double dip. Look at the Accenture and IBM prints from this quarter to see the real move. Accenture shares dropped 20% today because investors finally realized the consulting model is being hollowed out by its own AI narrative. The irony is that these firms are now making more money from remediation than they did from the original migrations. They are essentially getting paid twice. Once to break the system with automated AI tools, and a second time to bring in expensive human engineers to fix the broken logic. While the narrative says GenAI is a cost saver, the P&L shows it is actually a capital-intensive service sinkhole. IBM's infrastructure revenue jumped 15% this quarter, proving that despite the exit rhetoric, enterprises are actually doubling down on legacy hardware because the AI alternatives are too brittle. The move here isn't digital transformation. It is a consolidation play by incumbents who know their customers are trapped. The context window bottleneck. The technical trap is simple. Context windows. Large language models can translate a single function perfectly, but they lack the visibility to understand how that function interacts with a 1980s database schema across 10,000 interconnected modules. We are seeing the birth of technical debt 2.0, where the code looks modern, but the architectural logic is a black box that no one on the current payroll understands. This creates a dependencies graveyard that is actually more expensive to maintain than the original mainframe, the part no one wants to say. The decoupling of the AI narrative from the enterprise balance sheet is now complete. We have moved from the experimentation phase into the high-margin cleanup era, where the winners will not be the companies selling migration, but the ones charging for AI remediation. The 70% failure rate cited by Gartner isn't a temporary hurdle. It is a structural reality of applying general-purpose models to specialized legacy logic. For investors and operators, the signal is clear. Ignore the revenue growth in AI consulting and look at the churn in successful deployments. As we head into the second half of 2026, the strategy is shifting towards small, specialized models with hard-coded logic constraints. The era of the magical one-click migration is over, and the market is about to reset expectations for the entire software-as-a-service sector. Watch for a significant pivot in vendor messaging toward coexistence and hybrid cloud stability, rather than the total mainframe exits that were promised last year. The real margin is in the complexity, not the automation. Subscribe for more